current low and middle income countries are still grappling in how to increase the ability of raising taxes. I worked very closely with the governments in Chile and Ecuador to study together what methods might help them to increase their tax collection. This can be particularly hard when a large sector of the economy is informal and the government lacks a lot of information about the activities to be taxed in the economy. A trick, if you will, to get that information is if one agent in the economy reports about an obligation of another. For example, in the value-added tax, if I'm a firm who pays the value-added tax, if I want to deduct my input cost from my supplier, I have to ask the supplier for a receipt proving that he made a sale. And so if the supplier now goes to the government and says that he had no revenue, the government can prove that that is not the case. And we found that in the case of Chile, it's actually extremely effective. We found that evasion seems to be much higher on the type of transaction that is not covered by this paper trail. We also found that when we tell a firm like me that I will be audited, my supplier now starts to pay more taxes. Why? Because he knows that this could now come to bite him. After these exciting results, we worked with the Ecuadorian government, who were just introducing the use of all this third-party information about what kind of sales they could prove that a firm had. If a firm, for example, declared $1 million in revenue, but the third-party information showed that they had at least $2 million in revenue, the government would now notify them and say, wait a minute, there's something wrong, please adjust your tax declaration. Firms actually increased their reported sales to the amount that the government knew, but they also increased their reported costs by almost the same amount. So we see that if there's third-party information on one type of activity, like revenue, but not on another, like cost, that actually is not enough to enforce taxes. So the conclusion of all of this is that information is really important for tax collection, but it's not enough. It needs to be combined with really effective deterrence and very traditional auditing capabilities, such that you have the combination of information and deterrence together that leads to effective tax enforcement.